gotta look at the guy next to you. Look into his eyes. Now, I think you're gonna see a guy who will go that inch with you.
Hell yeah.
You're gonna see a guy who will sacrifice himself for this team because he knows when it comes down to it, you're gonna do the same for him.
Hell yeah.
That's a team, gentlemen.
Hell yeah.
Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is Friday, November 4th, 2022. The S&P 500 currently sitting at 3715. I'm David Zarling. I'm here with Ian Weaving Baskets McMillan. Kind of a big week for us as a firm and as a team.
For sure.
It's interesting because we can't talk too much about it, but a pretty big project got into the end zone. We're excited about it. Incredible amount of lift and effort went into it as a team. So thank you, Ian, for your work on this. You know, anybody on the adaptive team knows the work that went into this. Everybody at Client First knows the work that went into this.
I think the entire company is well aware of the last 9-10 months.
Our families are well aware of it. And so we want to thank them. It might have been a word of encouragement, anything as small as that, to allowing some extra time for some other projects, or even stepping up, you know, like Paul did with some of the compliance stuff.
Superhero. I wouldn't have wanted to do compliance. So
yeah, and it's all the strategic partners that go into this project. And so we're excited about, we'll talk more about the project in its more certain terms, right, Ian? We'll do that at a different time.
Yeah, hopefully, as soon as possible, we will get something out there. I hate that we can't talk about it more on this podcast, but a whole new level of compliance and things like that.
Yeah, we want to do it well. You know, we want to do it right.
And we will be able to actually share about our journey and not just beat around the bush. But yeah, very, very excited. Like you said, obviously the strategy gets a lot of attention and technicians get excited about the strategy. And it's an important part, but from a workload standpoint, lots of other equally large, if not larger pieces.
It's truly a team effort. It's truly, I think of the phrase, you're either going to win together or die as individuals. And the only way that this thing gets off the ground is with a team where people are making sacrifices. And that's truly what it was. You made sacrifices. Paul made sacrifices. Across the board, there were sacrifices made. I've gained like 12 pounds.
Yeah, no, it's exciting to be here. We've reached the end zone, but it was the opening drive. We scored on our first drive.
Congrats. Yeah, congratulations. You scored the opening drive. Plenty of season left.
Time for a TV timeout and then back on the field for the next phase. But yeah, pretty excited about it and definitely want to have a more in-depth standalone podcast episode and talking about it.
Yeah, it's going to be awesome. It was really a labor of love for clients. And so look for that in the near future. That could be anywhere from a week to 3 or 4 weeks, depending on the approval process for that. But look for that. Really excited for it. Let's talk markets, Ian.
Let's talk markets. Again, a week of going lots of places, but nowhere.
Yeah, 100%.
Mostly down. So no follow through off the last couple big, nice weekly green candles. Again, well, it's 2:00, so we got a couple hours, but it does not seem to be any significant follow through here from stocks or bonds, for that matter.
We're still above 3667, which is a daily close of importance. We're still above 3674, which is a weekly close of importance for the S&P. But we're kind of in this no man's land range still for like the broad indexes. But when you look underneath the surface, there's definitely a group of stocks going from lower left to upper right, and there's a different group of stocks going from upper left to lower right. So you got uptrends in some stocks, downtrends in others. It just so happens that the downtrends seem to be in the biggest pieces.
Yeah, got to be honest. There are definitely a lot of individual charts out there that look well, have acted pretty well. But yes, to your point, these names that we've talked about that over the last 10, 12, 13 years have gotten to these large weightings in the indices, that those tailwinds are now becoming headwinds.
Yep. And, dare I say that we head back into an era of stock picking rather than an era of indexing? Could this be the way that looks? And there's been eras in the past, right? I think you've covered in the past that the correction, the dot-com bust, that 2000 to 2003 era. I can't remember the number, but I thought it was around half of the S&P.
I think it's slightly more.
I had a positive return during that time frame. So the whole S&P was down, but there were stocks that had a positive return during that period of time. And so that would be a stock picker like market, correct?
Yeah, for sure. I mean, you definitely had pockets in there of various industries or sectors really holding up pretty well and, having some sustainable multi-week, multi-month trends, much better than what we saw in 0809, which was, I think, like 10 names in the S&P were positive from peak to trough. So that was definitely more of a everything out, including the kitchen sink, where this bear market continues to play out similarly to so far. I mean, we are 11 months into this drawdown. So far, yes, to use your term, a stock pickers market. And we talk a lot about individual names holding up, and I think you would agree a lot of that continues to come from the energy sector.
Yeah, for sure.
More and more. I mean, a lot of those individual names are going to go out to not just year-to-date highs, but all-time highs this week. Weekly closing highs. We'll see how they do today. But energy stocks, again, we've got the market down and energy stocks are up. I mean, it's a simple microcosm of what we've seen since January 1st.
100%. And I think it's really interesting. And I know Frank Capillari originally pointed this out and Willie Dulwich highlighted it. But I know I wouldn't have guessed this, but 20% of the stocks in the S&P are up on the year and above their 200-day moving average.
Yeah, 20%. I mean, think about that. It doesn't feel that good.
Well, no, because you're still talking about the majority that are not doing that.
Mm-hmm.
I know Fidelity had information it put out at the end of the third quarter that just talked about almost 95% of things could be stocks, bonds, mutual funds, ETFs were negative on the year. There's not been.
What about altcoins?
Even worse, man.
What about NFTs? When are we getting an NFT index? They probably don't come out with one.
Someday.
Someday they will.
Someday they'll have one.
We tease. I know NFTs will probably be a thing.
And crypto's still held up. And when I say crypto now, the altcoin stuff, that's all good and dandy. But some of those are like 70 to 90% off their highs. And I think we covered last week or maybe the week before, if you're a true market historian, it's really hard to find the things that have come back from that on an individual stock basis. I don't mean an index basis, but on an individual stock or individual security basis to see something come back relatively soon after a 70, 80%. I'm sure the pushback on that would be like, well, back at like Bitcoin in 2017 and 2018. I'm sure that would be the pushback, right? That had an 80% drop and then subsequently moved higher. Maybe that's the case. And we're still holding above that 18,000, 19,000 level in something like Bitcoin. That's a good thing.
I'm still like down 70, 80% of my Decentraland purchase. So
yeah. Hey, well,
I mean,
it'll still pan out.
I can eat the humble pie. So we'll see.
It'll still pan out. especially
We'll
when the
see.
meetings
We'll
are
see.
happening in 20 years in that Decentraland spot. No problem. So tech and growth, mainly big cap tech, right? We've talked ad nauseum about the generals, the titans.
Horrible. Golly. I know we talk about him a lot, like you said, but it
Well,
looks awful.
Yeah, they do. And the last one, there was an episode called Remember the Titans, one of our most listened to episodes. And in that, it was talking about these titans of the market and how basically the last one standing was Apple. And
It's trying to crack again.
I feel like the crack is here.
So we are most likely, again, got a little less than 2 hours before the close on a Friday. We are most likely going to close below 138 again. It's kind of, and that's the highs from August 2020. And it's had quite a few reactions there over the last 2+ years. So what seems to be another weekly close, daily and weekly close below that level. Yeah, I can't argue with, and this flat-ish 200-day. I mean, this 200-day is...
You're talking about on Apple itself?
On Apple. But to your point, yes, it is the last gladiator on the battlefield as far as mega cap and major indices are concerned.
And that 200-day you're talking about is, in my opinion, falling. It's below that. We're approaching the June lows. And if we eclipse that, that would be confirmation that sellers have control of Apple. And that would be the final titan of the mega cap names. But again, just like the mega cap names weren't the stock market before, they're not the market now. So even though you've got these 7% weightings, 8% weightings, the 10% of the S&P that's like 30% of the weighting, all correcting, there are pockets of the market that are performing.
Mm-hmm.
And that's why we take each chart on its own merit and study markets in
Industrials had
totality.
another good week.
Yeah. I mean, there's definitely, as we've said in the past, mixed signals. It's not like semiconductors out of the woods, but at the same time, you have a cyclically sensitive area like industrials. And so it's really an interesting dynamic. Aerospace and defense holding up well. There's definitely pockets of strength.
I look at them. I mean, I see the individual names. I would say nothing changes about our process. And they're running the same scans and looking at the same things, uptrend or downtrend. And yeah, we are in a downtrend, but when you go through new, highs, new 40-day highs, I don't know, there continues to be viable setups with good risk reward out there. And I would say they're failing less. Now, maybe this is like maybe I've got some recency bias because the last couple weeks, 3 weeks have been obviously very good for individual names, but seems to be fewer and fewer failing. We'll see what this turns into next week. And maybe to your point earlier in the podcast, maybe it just turns out to be an environment where it's market of stocks and some go down, some go up. And
well, correlations had been at 1, and now we seem to be seeing a separation away from that. ExxonMobil still going out, weekly closing high that we haven't seen for 1 week. It did it last week.
Yeah.
So energy continues to be a theme. It's interesting internationally. When we look internationally, there is some strength there. I mean, international stocks are still in a downtrend as a whole.
Yeah. And you got a nice pop out of China today. But which means nothing in the greater context of, to your point, it's downtrend.
But Latin America, there's some spots there. There's some things that, Mexico.
Mexican airports. Pratty has shared a few charts of Mexican airport stocks this week, which is interesting.
Well, people are ready for vacation, man.
I'm trying to
It's
get
time.
out just before the midterms.
Yeah, right. Yes,
I don't blame
that's what it is. The market is always discounting today. It's never discounting 6 months in the future. That's hilarious. That's the way the news is presented anyway, and most investors think is that somehow it's discounting the information today. And this was a big noise week, right? We had another Fed noise week.
Oh, Fed, and then you had unemployment, I guess was, or non-farm, like that stuff, I think was today. I never know. I think non-farm payrolls are once a month, but I could be wrong on that. The Fed stuff I feel like is, I don't know. I couldn't tell you what the Fed schedule is. I get on Twitter. My feed lets me know, I guess, if Jerome is talking that day or if there's Fed minutes coming out.
Yeah. It's kind of like earnings. We're aware of it. We're looking for the price reaction out of that. We're not sitting there marking up our calendars on Fed days and non-Fed days. And that probably drives some people nuts that would be listening to this. Like, how could you be like, well, it's pretty easy to figure out. And then B, we really care about the price reaction. And that's what we're going to focus on, right? We're going to focus on the signal. Avoid the noise. Doesn't make sense to get all wrapped up in opinions and a Fed that's responding to the bond market rather than the other way around. The bond market doesn't respond to the Fed. That's trillions of dollars at work. Supply and demand is going to do its own thing based on the opinions of that market.
Would you say that treasuries are the most globally held asset?
Yeah.
I mean, who doesn't own?
Our clients.
Well, touche.
But in fairness, you're correct. Many sovereign wealth funds, many actual central banks.
Sovereign, pension funds.
Tons of exposure to U.S. treasuries, right? It's based on the faith and respect of the U.S. taxpayer. That interest payment is going to happen. And so lots of governments own treasuries, and our government owns other nations' sovereign debt. And we still see no reprieve there, whether it's internationally or domestically with treasuries. But yeah, the treasury market, I mean, you're talking trillions and trillions of dollars.
Yeah.
And still in a downtrend.
And the fixed income arena is so much bigger than equities.
It's huge. I mean, it's not even like, I'm looking this up now, that the treasury market is 35% of debt.
Around the world?
Yeah, let's look at this.
So like all fixed income issuances.
So treasuries, corporate debt, mortgage related, municipals, money market, agent securities, asset backed. And this has to do with.
This is good CFA study material.
It's the US bond market. And that's 35%.
And so that includes like corporates?
Yeah.
Wow.
Corporates are 21%, mortgage backed 22%, municipal 9%.
I mean, I would say overall this trend's still intact for this week. So, I mean, bonds, right? Very lethargic bounce, especially from treasuries. Dollar. Where are we at on dollar?
Dollar's in consolidation.
Yeah, in an uptrend. Yeah, there's no getting. I mean, you're not going to convince me the dollars. I'm not saying this to like argue. It's just you're calling a top here on the dollar, which is fine. Anyone wants to do, that could absolutely be the correct take when we get 6-12 months down the road. But to me,
how about we get below 108 first on the trade weighted dollar DXY?
Yeah.
But it's had such a run, and for it to move sideways like this since basically September, perfectly normal. This is normal price behavior.
Sideways is pretty far away from its 200-day.
Some individuals would call, and I want technicians to think about this. When you observe price, like Ian said, moving so rapidly to the upside that it gets extended away from a 200-day moving average, okay, and then you get a pullback like this that really is relatively controlled. We're not talking about an immediate correction back to the 200-day. And again, what I'm talking about, that thesis is null and void below 109.35. But right now, this is a pretty standard, what technicians would call as a pennant, which just means a sideways move in price after a pretty big move, which the resolution out of this consolidation will go a long way towards telling us where we're at, both with the dollar and maybe with equities, right? Because directionally, the trend is up. You'd expect the consolidation to break to the upside. But if it doesn't, that's information too. But for right now, this is an uptrend with a consolidation happening.
Agree. Same with interest rates.
Yeah.
I mean, interest rates, no follow through off last week's red candle, which was kind of a wimpy red candle. I mean, it wasn't, I don't think it spooked anyone. And we continue to hold up above 3.9. We'll call it 4%. No give up there.
The themes remain the same. So dollar hasn't given it up yet. We continue to see rising rates. We continue to see value over growth, right? The non-sexy grandpa names versus the sexy software names. We're seeing strength out of the old school versus the new school. And that's just life in markets. Like, I understand that ExxonMobil is not like this awesome story to tell. And that some awesome app that delivers a scooter to your house that's awesome. But like the chart's the chart. Supply and demand is supply and demand. We don't get to argue with these things. And thank goodness I married my wife and not my opinions. And therefore, we don't need to have strong opinions in this market.
I totally agree.
Kate agrees with this. I know she does. I know Kate agrees with this.
She's told me. She's a closet technician. She likes to talk about
baskets,
priced baskets, priced to book.
Price to book. Well, that's not technician. She's a fundamentalist. You married a fundamentalist.
But I'm saying she's both. She likes to listen to the conference calls.
Kate, we love you. Thanks for dealing with our shenanigans. It's appreciated. What else, Ian? Where are we seeing strength, weakness in this market?
Strength, small caps, weakness, anything that's not small or mid caps. So you're a larger third of the spectrum, large caps and mega caps, or your top, I should say, end of the spectrum. Large caps, mega caps continue to look pretty off on a relative basis. Tech, software, cloud computing, work from home, all that type of stuff. Still pretty internet.
Right. Internet. Wow.
Yeah, I mean, all of it is ARC. I mean, ARC will be at new weekly closing lows. Let me check that.
Not quite yet.
Yeah. Yes.
It's getting close. Getting close.
Fintech. I think I said software, online retail.
So all the fun story, narrative names or broad representations. Yeah.
IPOs. They're going to close year-to-date lows. Solar. I mean, TAN's going to have to get above 79.80 for me to be too intrigued with that.
So it's definitely the value names holding up, tilted towards small versus large.
Biotech's been okay. That has helped out small caps. Continues. I mean, it's been kind of a tailwind all year. You look at the relative chart, and over the last 6 months, biotech's outperformed the S&P by over 25%. But yeah, a lot of those small cap growthy, techie. Even look at large cap consumer discretionary. That's close to year-to-date lows.
For sure. And the big picture is a lot of these areas, equity-wise, whether we're looking international or domestic, from a broad basket perspective, from like an S&P or a NASDAQ or a Russell 2000 or an EFA perspective, these are all in downtrends below falling 200-day moving averages. So we have downtrends in place in the big names that are impacting the basket overall, but there's spots of strength that are available for opportunity. We've talked energy nonstop on here for a long time. What about other commodity related companies like metals and mining? What are we seeing out of those?
I mean, I think metals and mining, especially on a relative basis now, again, like anything, pick your spots, but okay, I mean, you take the relative chart, new relative highs today. It's, if I'm using XME, steel, certainly one of those areas that has held up well. Gold miners, silver miners, they have their days and they don't have their days, but overall, it's not a horrible relative chart. Copper.
Yeah, talk about copper a little bit here.
We'll see how this plays out. This move today out of copper. So it's been in a downtrend since April. Pretty strong move, June into like mid-July-ish, I think. And then has kind of consolidated there all summer and fall around this, we'll call it 350, 345 area. So to see a move higher today, that's a pretty big move. Not what I would have expected, but bullish for now.
For an economically sensitive metal.
Yeah.
Basically. And when you look at a gold copper ratio, and I know most look at it the other way, copper gold, right? You have this weekly move in that relationship moving back into a 200-day moving average.
Yes.
And so we'll see how that plays. We'll see.
And some pretty big horizontal touch points there as well.
And so we'll see how that plays out in the weeks to come. Speaking of trends.
Do you have that chart pulled up right now, Dave?
I do.
How many decimal points you got?
Well, I've got to reverse. Let me switch it. I got to go copper first. That's what you're.
Yeah.
You have copper first?
Yeah.
I've got. Wait, are you telling me TradingView just made an update? Is that what you're doing?
You have 4?
Is that what you're doing to my life?
I do live on air, bringing you breaking news. This is great. This is actually great.
This would be fantastic. Hold on. I'm getting there. I'm moving slower today. I do.
You have 4 decimal places.
I have 4 decimal places. Bravo.
Yeah. Thank you, TradingView. That's great.
Thank you. Yes. Wow.
Really helps out with the relative relationship charts.
Absolutely. Here I was, and I still am, very excited about the project that scored today. But this is up there. This is, I feel like we just shut the podcast down and that's it. This is
Maybe
great.
We should. Where are we at on 200 weeks?
Yeah, that is one thing we should talk about is we've talked about falling 200-day moving averages, but we've also been acknowledging 200-week moving averages.
And David said us some good points around this of 200 week is when you really start to potentially enter.
Really gets messy.
Yeah, where you're definitely looking at continued more months of drawdowns.
Yeah. And I know like the NASDAQ 100 using the Qs, we're back below a 200-week moving average, and it almost is like a rejection of it. When you look at something like IWM back below, I wouldn't say it's a rejection. And IWM, maybe by the end of the day, somehow it gets back above its 200-week moving average, back above it. But if not, again, risk is high. S&P still above its 200-week moving average. But there's plenty of things that from a big mega cap tech perspective that are not. And so there's definitely the potential for messiness again going into this weekend.
For sure. We're going to see if we break our streak of 2 straight Fridays of buying. Now that's something that a lot of people tend to get worked up over. XLK tech sector back into its 200-week, obviously discretionary, still similar to Q, seeing more of a rejection there. Microsoft will close this week right on its 200-week moving average. As far as FANG names are concerned, Google crossed through its 200-week this week. Amazon has been there. Facebook has obviously been there.
And Amazon's getting real messy below that.
Yeah, Netflix has had a decent run the last few months. I think back to, where it was this summer. I know it got up into that gap, but pretty nasty weekly candle there. And
100%.
Apple's still pretty far. So Apple's got, and again, just talking FANG names here, FAMG, whatever you want to call it, whatever your acronym, Mega Cap Tech. Apple's still got another 19% till its 200 week.
That much, huh?
Mm-hmm.
So painting the big picture before we sign off, we still see from a daily time frame. So if you want to call that near term, intermediate term, days to weeks, falling 200-day moving averages across broad spectrum. However, underneath the surface, there's definitely pockets that continue to move up and to the right. Clients are familiar with those, but the thesis still continues to be confirmed. Mega cap tech downtrend, value in its various forms, whether it's small or large, uptrend, or at least relative outperformance. Rate trends haven't changed. We didn't get a chance to talk commodities. We talked a little bit about crypto. But before I remind everybody that it's daylight savings and they get an extra hour of sleep, anything you want to wrap up with before we hop on the market call?
I would say just continues to be mixed signals. I can pull up a decent amount of stuff that could say, short-term, intermediate-term bullish, and a decent amount of talking points that could tell you to be certainly longer-term bearish. So mixed signal. We haven't had any big flush yet. And when I say flush, I'm thinking something more like September, October 2028 or Q4 2018. No capitulation in broad market price action.
Right. Haven't had that. We don't have to get that because maybe we're getting that all these mega cap names while other things move higher. But your point is valid. That is something to pay attention to. Is we've had a week like this where the VIX has fallen off.
Yeah.
And so, volatility is back below, I believe, 28 for the first time in a long time. We visited 24 today, and it's been a while since we've touched that level.
For sure.
From a big picture perspective, however, you could also see volatility pick up from here. And I know the topic du jour, right? Everybody's focused on next week, and you alluded to the midterms. We've talked about in the Lunch and Learn numerous times, no political party has a monopoly. Yes, there will be volatility. Seasonality has played out almost to a T this year as far as midterm election years. I'm just happy that the commercials could potentially end. I'm looking forward to that and the extra hour of sleep. Ian, any last things before we roll out?
Yeah, agree with you. No, our clients are very aware, and I tell them every 2 years, there's no one that wishes they could get up and say, oh, my political party is better than your political party when it comes to stock market returns. It's not the case. No biases to be had there.
Well, and elections are important. Do your civic duty, right? Get out. You're a citizen of the United States. Go out and vote, man. That's whatever your beliefs. I have mine, but everybody should vote on Tuesday, and that's great. And we get to follow that up with a Veterans Day, and those individuals, those men and women fought hard so that we could have this vote to determine our representative democracy. And that's a beautiful thing that should be celebrated, not a divisive event. It's a very exciting event. So Ian, I appreciate you. I know how tired you are as we cross the goal line for this project we had this week, and that you are looking forward to a fantastic weekend. And I want to wish your Chiefs well as you attend in person.
It'll be a good Sunday night.
It's going to be awesome that you're going to revisit your old roots.
Mm-hmm.
It's awesome. Everyone listening, we really appreciate you as well. As I have started to say every week, please do give us high rankings and share this as it helps us get word out.
Have a great weekend, everyone.